The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White. We meet here every day between 2 and 3 Eastern Time live, but of course you can listen to me at any time at the headquarters of Technical Trading and Investing at TFNN.com. And of course, if you're out wandering around, you can always go TFNN.mobi and catch just the audio portion of the show. But of course, if you go to channel 14 on TFNN and Tiger TV, you'll be able to see my charts very clearly, as well as if you're one of our faithful and wonderful compatriots in the den. So let's see what else we have going on here. So, quick look at the indexes. Right now, we're off about 4 points on the S&P cash. On the NASDAQs, we're down 5. And volume is fairly decent comparatively to the previous few days. 2 billion shares on the consolidated New York Stock Exchange tape. Much better than the 1.5 billion shares I think we had yesterday and the day before, 1.7 or 8. As we started the show, volume's been very, very light as they've continued to move the stock prices up here. But it'll be interesting how we look at this. I suspect that volume and the VIX is telling us the true story. That a lot of people just think that there's no way this market can fail. And I will always take the opposite side of that bet if no one thinks it. I almost said I couldn't find a soul that didn't think this market was going higher and that we didn't make a deal by Thursday night. But there was one gentleman that actually brought that point up on one of the CNBC or Bloomberg. But he thought and actually explained it correctly. And that is, what do we have to win and what do we have to lose? If someone can tell me that we've got 200 points higher to go on good news Thursday, then I don't think that they're probably telling me the right story. Could we see 20 or 30 points? Do we go back up to the old high? I think you could probably say that's right. So right now we've got, 24, 23 points higher on the S&P cash. What would be the downside? Learning to trade is is not only looking at how much you had to lose, but the expectation of how many times you'd win or lose if you could go back and use the same set of circumstances all over again. But today, what we are looking at, I think, is a market that says 99.99999, no, I'm not German, 9%. That we are going to have a deal, and it's going to be in the next 2 days. I suspect that's wildly out of bounds, and I was trying to think of the reasons why. I've kind of alluded to it over the last couple of days, but I think it's a horribly sycophantic press. We know that 90, last election it was 90% of journalists that are in Washington, D.C. voted for one presidential candidate. I don't think we're going to find a lot of people that are even partially able to make clear and distinct decisions about a political event. For the most part, they all are homers. They live and they all go to the same parties. If they don't toe the line, they're not invited back. There's a lot of social pressure. It's probably worse than high school. In that you have to be in with the cool people or you just don't make it. And we see people that go there very principled, humbled, especially in elected office. They go there in 4 or 6 years. They've really become the people that they went there to defeat. And probably a great parable in Animal Farm, that wonderful book, where the pigs took over because they didn't like the farmer. But at the end of the book, of course, the pigs learned to walk upright on their back 2 feet. And at the very end of the novel, someone looks in the window and they can't tell the difference between the pigs who stood upright and the farmer that used to be there. All we do is separate. A lot of times end up substituting for the evil we know for the evil that is to come. And probably not a harder place in the world to not be corrupted than Washington, D.C. Of course, I have a feeling that if you lived in Soviet Russia, you were probably corrupt when you got there. But a lot of Mr. Smith Goes to Washington's end up with Mr. Smith Goes to Leavenworth after they just get on the gravy train, start expecting it, and that's it. And I see quite a bit of that, at least in my eyes, out there. So let's get into some of the news out here. I think we're going to see this market. I'm thinking that we probably have a 50-50 chance, not a 99% chance, that we go into Friday morning with no deal. That the VIX is continually been moving up all day, I think is actually telling us the true story. And that is we have a 50-50 chance. We have a 50-50 chance that we go up 25 points from right now in the S&P cash between now and Friday. And I think we have probably a 50% chance that we could lose 200 points in 3 days. Probably would start Friday and go into next week. But I think over 3 days, maybe you get one of those days as a flat day or a slightly up day. So it may take all of next week. But if we don't have a deal going into Thursday, I suspect we're probably going to see 50 to 75% points come off almost as quickly. And again, I think the reason is that too many people are watching the news, and basically it's probably like being in New York and asking what the chances of the New York Yankees are of winning the World Series probably in mid-May. And that is 99%. We've got all the money. We've got all the players. They're taking all the steroids. Oh, so we probably shouldn't talk about the steroids. But anyway, we've got all of it. And, of course, I live in New York, so Yankees are going to win. We've got the highest paid players. They've got to win. And, unfortunately, they don't win all the time. And it's probably impossible for some sports writer who is in New York and covers the Yankee to give you probably a really good fair assessment. When they're doing bad, he's probably harder on them than most people, and when they're doing good, probably couldn't see where they were doing bad. But that's just human nature. So I've been working very hard on the mute button over the last few days and watching it, but we'll see. Anyway, we're at 1705 now on the S&P cash, and volume is been fairly decent all day long. Certainly not the lightest volume opens that we've seen the last couple of days. So let's get to some of this stuff out here. Okay. And again, just like Walt, who just signed up, Tom and I are going to be doing a webinar tomorrow night for the art of timing the trade charts. You certainly can get a copy of that for the next 30 days for a slim $1. One saw, it's not a sawbuck, isn't it? What's $1? It's not a sawbuck. Sawbuck's 10. A fin's 5. I wonder what a dollar is called. I know it's a loonie up in Canada because it's got a bird on the coin. I don't remember what a dollar is. One thin dollar. Anyway, certainly you can get that same thing. Go to the front page of TFNN and sign up now. This is your last chance. And, of course, get signed up for the webinar tomorrow night. We're going to be going through a lot of stocks that I think are of supreme interest, and some of those being gold stocks. We're going to go through them with Tom, go through them with the charts, and see what tools and how we should be applying them. But we've got a lot to look at. Okay, so what do we have in the news today? and we're going to go through it. See if I have anything else here. Okay. We're going to be talking about Apple in a second. And one of the things I think Apple's been oversold on is just how much business they will be able to get in China. I think China is trying to keep them out to some extent. And also, there's a company that is directly going after the needs of Chinese. It's called Xiaomi. It's Xiaomi. They just had a new smartphone come out, and on their website, they sold 100,000 of them in 90 seconds. They continue to really go after that market. They are an Android company. And, of course, one of the big guys from Google just left about 4 or 6 weeks ago to head their marketing efforts all over the globe. So they're going to be leaving China fairly soon. But designed and actually used in China. And, of course, as being a Chinese company, not a whole lot of problem with the Chinese government out there giving them a lot of grief. I continue to think that Apple's overstating how many of these they can sell, mostly because I think when we start seeing them actually sell volume in China, we're going to see that Apple had to give up their crown jewels to get the business. Now this is very interesting if you're watching on Tiger TV. Let me find this thing here. This is a chart that is making the rounds. And a lot of people are giving this at least some credence. And what it is a chart between 1928 and 1930 during the crash and May 2012 to the current time frame. Pretty much a parallel before the crash that we saw in the markets, and being passed around quite a lot. Tom DeMark is passing this around, and let's see what we've got as quote here. The mark is going to have one more rally, then we give above that high. I think it's going to be more treacherous, DeMark says. I think it's all preordained right now. He feels it's probably irrespective of how and when the crippling impasse in Washington is resolved. If you look at new highs and new lows on the New York Stock Exchange, he says every time we make a higher high, there are fewer stocks in the index participating in that high, and that is getting narrower. And once that happens, you typically get a collapse. Pretty eerily close to the same kinds of highs out here, but interesting nonetheless. We'll have to see how this works out. Anyway, we'll be back in a minute. You can always give me a call, 877-927-6648, 877-927-6648.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Has got a few announcements out and a rabid discussion going on in the den at the moment. But what we have in Apple is a little bit of move up today, not a whole lot of volume. What we do know is that on the 22nd, they are going to have their next rollout for new Mac products and for new tablets. Anybody that has followed me for a while knows that the biggest problem I have with Apple is that their margins are continually falling, not increasing. And of course, this new 5C probably not helping a great deal. And some of the obfuscation of the truth, also a problem. I've told a story before. In 1986, I was standing in line with Steve Jobs behind me and Bill Gates in front of me. Bill Gates complaining to the African-American woman behind the counter about why the hot dog cost $2.50. Of course, it's 1986. And giving her a ration. Of course, she cared not. And behind me, Steve Jobs trying to tell a newspaper reporter, most likely Walt Greenberg, although I can't tell you that for sure, but I certainly knew who he was, Steve Jobs. And of course, he was telling everybody why a Mac did not need a color screen and you wouldn't need one. And of course, so we had the spin-meister behind me and the guy that was really worried about money and every dime of it in front of me. Really looked at the two ways that people thought of it. But here's probably the thing that will define both of these gentlemen over time. That was Steve Jobs was a radical. He decided to come in and throw hand grenades, and Bill Gates decided to come in and own the world. And we have to remember that Steve Jobs was thrown out because he basically had run his company into the ground at the brink of a bankruptcy. And gave opportunities for other people to come in and take over and toss him out. I think that the way they did it probably forced him out more than anything else. But what we have is a guy that has gone through or went through a couple of iterations, and I don't think ever learned the lesson that David Owl wrote about in his great books about marketing high technology, and that is if you have a big enough market, you will never be able to address it by yourself. You need to have nice allies. And not only in the 80s, but again in the 2000s, what we found out is that Apple got in, created some big markets, and unfortunately everybody that wasn't able to do well with their iPhones, because of course they weren't able to sell them. They, if you were a cellular provider, you weren't able to get them. You make a lot of enemies, and eventually those guys all get together and beat you like a redheaded stepchild. And of course, they get the clubs out and beat you like a baby seal. And that's what's happened. You end up making a lot of enemies that really don't care about you in the long term. The other downside that he doesn't understand is the whole idea that you can have a walled garden. And that is a technical term for marketing high technology, and that is you can have a walled garden as long as the market is niche and small enough. If it is large, eventually it will bust apart. And every company that has tried the walled garden approach that I know of has eventually failed. So I would say that he has two lessons from history that would say that Apple, once again, is probably going to do the exact same thing that happened, and that is that they're going to have made a great market, and then they're going to give it away because as it was a opportunity for them to actually do the right thing, they chose not to. In the case of Steve Jobs, it was his option to start selling the operating system and let other people build Macintoshes, and he just sell the software like Microsoft did, and of course he went the other way with that. And I can say that there would have been a lot of pressure for him to not do it. But he knew the right thing, and he wrote about it, and in the end couldn't stand up to it. But he had the opportunity to go down the Microsoft road, ignored it, and of course destined the Macintosh to be less than 10% of the market for years to come. I digress. We will be back in a few minutes and continue a little bit of news and try to get into some charts out here on a market that really isn't going anywhere fast.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Kind of interesting discussion in the den about Apple. One of the other books that I recommend highly besides the David Al book, which if you're looking for, maybe that's it, were two really great books. One is called Crossing the Chasm, and the other one is Marketing High Technology. You can go to Amazon and just search both of them. You'll find that they're fairly close. But both of them I used in the early 90s when I went through and basically made 5 divisions out of a company over a number of years with different products, both from television and Hollywood, starting with low-end video producers, moving to animators, going into the security business, and a bunch of other things, all with a similar technology, digital video, which is what we were all about. But we always had a company that I knew the owners were never going to go all the way. And so I always had to look for opportunities that were small, $50 or $100 million maybe in sales for a product. But, you got a handful of people. That goes a long way over a number of years, especially when you can get 75, 80% margins when you really target to a niche audience, which we pretty much had to. The owners, the guys that really ran the show, the bean counters, probably why I have such a distaste for CFOs being CEOs, and that is they are risk averse. But anyway, I wanted to bring up something. See if I can do it here easily. I've been shorting the bejesus out of the market over the last few days, and starting to buy puts now on the market, and that is because I suspect that everybody has little if any belief that we could go over Thursday. And why is that not doing that? I thought I had, hang on just a second. There we go. I'm actually showing the crash, the book here. But this is why, and I think, I don't know. Maybe it's back to my whole issue with the people in the media not having a brain between them. But I'm going to read you U.S. Constitution, Article 1, Section 7. And that is, all bills raising revenue shall originate in the House of Representatives, but the Senate may propose or concur with amendments as on other bills. But the part that everybody keeps saying is, well, the Senate has a bill. It doesn't matter if I have a bill. All bills for raising revenue shall originate in the House of Representatives. So no matter how many games Harry Reid plays, no matter how many times a representative in the Senate decides to run in front of a microphone, they don't do jack. All bills for raising revenue shall originate in the House of Representatives. So they can write all they want. They can pass all the BS that they want. But until a bill comes out of the House of Representatives and the Senate signs off on it and the President signs it, will it become law? And I think all the we're senators, we know more than you, probably not sitting great with a lot of people that were voted into office, just like they were, put on their pants one leg at a time, just like they are. And my guess is that just the whole I was going to say Hollywood crowd, the whole government crowd out there probably doesn't know a lot of people that have just been in Washington, D.C. for 2 years and haven't been horribly corrupted already. But just a thought out there. Since no one ever speaks about it, they always talk about these wonderful bills in the Senate, which don't mean jack, because someone's got to bring it up and pass it in the House of Representatives before it goes anywhere else. And that's why I'm not very highly optimistic that we've got some kind of deal that the Senate's going to cram through the House. It just doesn't work that way. Okay, so what else do we have going on in here? Tesla is moving a more self-serving TSLA. A self-serving upgrade and a self-serving survey that came out has the fingerprints all over it of Carl Icahn, but the stock is responding to it a little bit. Got up into the 180s. What you could have is a small ABC setting up in this. What do we have for expansions out here? Let's see if we can get something just a little lower. Maybe we'll get... Yeah, there it is. Did a 63% retest. If this does fail out here in Tesla, and of course this is one of these high flyers that if they grew at the current rate, still in 10 years wouldn't be worth their share price today. An ABC, just a 1-1 would take them to 149.50, and I could suspect that we could see heavy displacement in the market. That wouldn't be too hard to figure out. But kind of interesting that Carl Icahn's still all over this thing and pushing it when he's got a couple others that are probably problematic. But this is an analyst, and there's an upgrade, and he's publishing the results of his 892-person survey of people. Just sorry. I just don't like taking advice from my wife's divorce attorney. I think I'll probably want to get my own attorney to give me advice, and I think probably problematic when we see such weak endorsements like that. Probably better cases to be made than phony press releases. IBM. Let's take a quick look at that. We've got a lot of stocks lining up for earnings tonight, so we'll take a quick look at some of these things over the next few minutes and see if we can make anything out of this. IBM continues to look like one of the weakest stocks out here. Let's take a quick look. Oh boy, for whatever reason, everything's going very slowly today. Anyway, probably a good look at a ABC down out here. And let's see if we've got 194 now. Let's go look at this. And make that B, and make top of today is C. Of course, they're going to be coming out with earnings. It's done a 50% retracement off the top right now. And like I said, we're probably looking, this thing really looks like it wants to go to about 159. 1-to-1 ABC right now would just take it to 170. The total blowout, a 1-to-1 618, would take it about to that 159, which would be very interesting. But of course, they've been continually firing people for 3 years. They continue to do huge share buybacks, and this thing still can't really catch a decent bid since back in May. And it's going to be very interesting what the news is, but it really looks like most of the people on Wall Street out here are spending a lot of money or a lot of time getting out of IBM right now. See if I can actually find, I think I've got some other ones here. I want to look at last night to be 14B. So after the bell tonight, we're looking at Intel, CSX, and Yahoo. Yahoo has been doing, actually, the stock's been doing well. The company's been doing rather poorly. And the question is, why does Yahoo keep going up? And that is because they keep on moving its Alibaba value up in China. I'd say 99.999999% of all the appreciation we've seen in Yahoo has all been about Alibaba and nothing about Yahoo actually making any more money. Don't think we're probably going to see any more about that. As long as the China market remains hot for these internet companies, I think we could see Yahoo do well. As soon as they IPO, which they say they're going to do in the first 2 or 3 months of next year, watch for Yahoo probably to go to the ash heap of history like BlackBerry. There's just not a whole lot out here. It may take several years, but with all the PR push because they hired a female CEO, and she may be very good, there's just not much left here in Yahoo. And I think when we look at the books tonight, and get the view, probably the exact same thing. This is all about one company that they bought, kind of like the equivalent of eBay buying PayPal. Probably wouldn't even be hearing about eBay anymore if they hadn't bought PayPal, similar kind of thing. Other things out here, Intel, which I'm going to be watching very closely and see how they do. I don't think that there's going to be a lot of beliefs that anybody disappointing tonight isn't going to get slammed. We've had about the last 2 days of Intel up on lighter volume. This thing's been out here at about 2350. I keep on looking for this thing to come to about 2150 and set up a a low that you can buy in this thing for the long term. I think it's going to be doing well over the next few years, but still need it to get back into that 2150 level. But we'll tell tonight after the bell with earnings. CSX is another one. And this is going to give us a good idea in the transports. This thing's just been going sideways for the last 4 days, so you can't really get a good read on it either. But we're going to be watching that very closely. Now, tomorrow morning, we're going to see a few more that are going to be interesting. ABT is one, which is Abbott Labs. This thing kind of looks like it tried to make a bottom. It had a nice bounce, came back even though with higher energy. It's been going kind of sideways out here. I'm going to be watching this one very closely, but really looks like this thing has been basing out for a while and wants to come down to the 32 level. If you could get it back there, volume finally dries up, maybe that one would be a play out here. Mattel also in the morning. Going into Christmas, going to be very interesting how this one and what their prediction for the falls are. This one has made a high volume low, which is going to probably get tested. And I suspect if the earnings aren't perfect, it's going to get. It's got the October 8th low out here at $40 with 6 million shares, and that's just looks like it's just dying to get tested. Of course, if you could go through there with more than 6 million shares, you've got an ABC setting up out here. See if I've got that 43. Okay. A, B, and that's going to be C here. It's done basically a 50% retrace. It's come back to the gap down that it had on the 7th of October. That gap down was 2.8 million shares. We've got 1.6 million shares here today. 1.7 million shares yesterday. So this thing is set up on a disappointment to go back on a 1-to-1 ABC down just to $38.11. So it's going to be interesting. After the bell tomorrow, we talked about IBM. Let's take another quick look. Don't really probably need to. Let's look at eBay. This one has not been doing well, even though PayPal has. It's been in a big trading range from about $50 to 56, high 56s, 57. And can't really get a good read on this other one, but a lot of these have set up ABC down patterns. This one would be another one. We'll set that at A. That one is B. And we'll take that as C out here. Basically a 56% retracement off the last move off the September 26th high down to the October 9th low. And 1-to-1 would take it to $50. I think the best you could say, there's a high volume gap at 57. If this thing would surprise to the upside, you're probably looking at that. Of course, during the show here, I've got to juggle several hats all at one time. And part of it is watching the market move at the same time. Not surprisingly, we've rolled over from the beginning of the show. I think everybody's finally waking up to the fact that the press has been bamboozling them for a number of days. And they're going, well, it is Tuesday. If they could get this all done in 24, 36 hours, that would be a miracle. And we're pretty much getting up against that right now. But we're at 1697 on the S&P cash off of 13 points. Volume, again, finally has picked up today. 2.4 billion shares on the consolidated New York Stock Exchange tape.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, anyway, kind of interesting. There's always the conventional wisdom, which I don't believe, and someone's trying to give me some of that conventional wisdom now. It kind of, every book I've read about people of success, always interesting. And the one that was most interesting to me was that just about everybody I read about that ever made it in radio, basically, and made it big, basically had to get fired from a lot of places to make it. And for the most part, had to tell the program manager to stuff it. And, of course, they got along well. Most of the people that just followed the crowd never went anywhere. But it's interesting. Anyway, we've got a caller out here. Yeah, if I can go back and Lou from Nashville. How you doing, Lou?
Okay. I would like you to look at December contracts for the mini gas, natural gas.
Unfortunately, I can't get it up on this screen. I've got my show and my trading computers on separate ones. What are you trying to look at? Hello?
Yes, the possible next buy.
On gasoline itself?
No, natural gas.
Oh, on nat gas. Okay. Let's see. Hang on just a second, and I'll get the ETF up. It'll give us a good idea. Not a perfect idea, but a good idea. Right now, and probably in the next hour, we'll have Andy comment on it. But here's my problem with natural gas right now. From everything I read, they're still making more of it than they can find a place to put it. And this last leg up, why good? And you're probably going to have a natural move up. I'm looking for at least the UNG to probably make it back into the low 18s before I'd pick it up again. The energy the last few days has made me very nervous out here. So, I mean, this thing may hit $20 at least on UNG, but certainly just don't like the last couple of days of volume out here. So I would say, are you watching on Tiger TV or in the den?
No, I'm not, unfortunately.
Okay. There's a nice gap that happened on the 7th of this month. It gapped up with volume. My guess is this is going to probably come back down one more time, so you're going to probably see 1850 on UNG, and you can go back to the contract on that when that hits it and see where it's at. But it's probably going to be right around that 1850 level on the UNG, which is the ETF for it. I like the ETF, if at all possible, over the contract, because the contract's always got more and less shares out there. One nice thing about the ETF is they create shares and get rid of shares, but most of the time it's fairly constant. So we all do price and volume trading a lot here. To me, it is a lot more stable than trying to figure out what the open interest is on any contract. I bet Andy will probably talk about that for a while. But that is what I would be looking at, probably about 1850 on UNG, and then go back and look at the contract itself. But energy's fine on this, just doesn't have escape velocity in the last 3 or 4 days. So I expect we have one more pullback to 1850, and then maybe if we could get some cold weather, maybe we'd actually get this thing going.
Okay, great. Thank you.
You bet. And, of course, Andy stalks me on Tuesdays and Thursdays. He'll be following me right now. Anyway, see you tomorrow. Same bat channel, same bat time.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.